Hello everyone, welcome back to another week of Condo Investing with Costas. I'm Costas Kivelos, founder of First Access Condos and mentor to thousands of realtors across the GTA on pre-construction purchasing. Now this week, we have one of my favorite episodes. I really enjoy taking the time to let you, the consumer, know exactly what's going on with the market and forecast what's going to happen in the future. So sit tight, enjoy a couple minutes from our sponsors, and I'm going to come back and tell you exactly what's happening and what to expect is going to happen in pre-construction in our city. Thank you.
Let's talk about make money.
Welcome back everyone. Again, I'm Costas Kivelos, and I'm not gonna do any long intros. I'm gonna get right into the meat and potatoes of today's episode because we have a lot to talk about and it is all relative. Today, we're gonna give you the reasons why and how and what is gonna happen. So first, what has been happening? So I'm gonna talk to you about what we have all experienced over the course of the last pretty much a year and a half. COVID came to our shores early in 2020 with everything shutting down in the Greater Toronto Area and pretty much the province in late March. So what happened was, this was unprecedented territory and nobody really knew how the economy was going to weather the storm. So what we saw was a shift from working at the workplace to working at home. And Toronto essentially weathered this storm very well. We are a tech capital, and most of the people that work here could still continue working because you were either working from home or you were essential. So what we really saw was a small segment of the market, and stats says it's between 8 and 10%, which work in the service industry, and they've been very hardly hit, and my heart goes out to them. But we have to look at the bigger picture. And when investing your money, that's what you need to do. You have to know all factors at play. So what really has transpired over the course of the last year and a half was the majority of Torontonians actually saved substantially more money. The estimate is between 60 to 70% more savings were accrued in 2020 in comparison to 2019. So the majority of society actually saved and had larger bank accounts because of COVID. Now, that might be one of the reasons why everybody's not protesting. But regardless, we're not going to get political here. But what we're going to talk about is the economy. So our economy, the economic machine of Ontario and Toronto specifically, is quite healthy after COVID. So when you have all that capital being built up, money needs to do something. It can't sit stagnant. Okay, money is essentially, think of it as a living entity. It needs to get out there and do something. Because if you leave it in the bank, we all know you're not making much money. And sometimes when you leave it in the bank, you're actually losing money. And we'll talk about that later because inflation is a real fear that we're currently experiencing. So we just recapped what happened with COVID in our city from an economic standpoint. Now I'm going to talk about what happened to the housing market earlier on this year in late 2020. So we have one factor at play, and that is the majority of Torontonians have saved up more money. Secondly, we also had a lot of people who just realized during COVID that their homes are quite small and not as livable as they thought. Now that is quite an epiphany when you're essentially under house arrest and you're not supposed to leave your home. So we have one factor where people have saved up more money, and a second factor where they're realizing their dwelling is actually smaller than they thought. Combine those two, and you see a surge of people upsizing their homes or changing their location or moving from condos to houses. Now, if you add one third and very important factor at play, interest rates. Interest rates actually dropped to fuel the economy through COVID, but a byproduct of it was that if you were going to borrow money for the purchase of a home, it just became cheaper to do so. So now we have three factors at play. And when all of those combine, a synergistic effect is created, and there is a jump in resale housing prices. Why is that? Because people are simply going to buy bigger, upsize, change their homes. So that's what we saw. We saw record low inventory because no one rushed to sell their home during COVID. We saw an increase in demand. So when demand increases but supply stays the same or decreases, prices go up, and that's simple economics. All economics are based on supply and demand. Now that is what we saw with the housing market in the start of 2021 and in late 2020. We saw an increase, a drastic increase in home prices because of a surge in demand. So now, what do we invest in? We invest in pre-con. So everything is the world in relation to pre-con. So now we get to pre-con. We see a jump in demand for resale, a drop in supply, raising the prices. Now, how does that affect the pre-con market? Well, pre-construction in our city has always been healthy for the better part of recent memory. Never forget, we sell more pre-construction condos in Toronto and the Greater Toronto Area than any other city on the planet. So it's only natural that the pre-con market would stay healthy. Now, you heard rumors of mass exodus, people leaving urban centers to go to the countryside because of fear of COVID. This was media hysteria, and it was simply not true. Okay? So don't even think about that. There was a decline in the rental market because people weren't moving to rent, and we also didn't have the foreign students. We didn't have close to 60,000 foreign students that we have every year, and the vast majority are renters. We also had a lack of tourism. So about 5,000 Airbnbs temporarily flooded the market. So it was only natural to see a drop in rental rates. But again, this was temporary. And Buzz Homes just forecasted that there's going to be a huge spike in rental rates come September when the foreign students get back. So the world of pre-con. Pre-con this year in 2021 has been hitting record levels at majority of projects. Projects are selling out very quickly. The inventory cannot stay on the shelves. And as long as something is priced right, market is going to absorb it very quickly. So we had an increase in resale housing prices. We had a very healthy pre-construction market. This is all writing on the wall that we are going to have a phenomenal year in real estate. And that is what we're forecasting. Now, there's one factor that not many people know about, and I need to explain it to everybody. A lot of projects that were scheduled to start selling this first half of the year in 2021 have actually delayed till the fall. And why is that? They're delaying to the fall because an unsavory byproduct of COVID has been a jump in construction costs substantially. Construction costs are estimated to have increased in 2020 by 10%. In the first to second quarter of 2021, they have increased an additional 10%. So what a lot of seasoned developers have chosen to do is delay the launch of their projects to the fall where the dust is settled and construction prices have flattened. And this is an important thing that you should know about. Trust a developer that does this because the last thing you want is a project to cancel. And of my experience of selling close to 100 projects, there's only been 2 that have canceled of the ones I sold. That's 2%. That's a great percentage, and it's fantastic to know that you're investing in an industry that'll provide you such security. So there was a lot of information that I gave to everybody in this past segment. So I'm going to do a quick recap. We all know what we experienced over the last year and a half with COVID, and we should all know by now that our economy, although it may not appear like it, has done phenomenally well. We are actually the envy of the majority of the world, okay? We know that resale housing prices have skyrocketed since last fall. Now I've explained why that has happened. Supply and demand. There was little demand, not many people were listing. There was a tremendous amount of supply for the factors I mentioned. There was more money being saved up. There was people wanting to change the size of their homes, okay? And there was lower interest rates. We also spoke of how the pre-construction market is a precursor to the future and how it has remained healthy and strong, regardless of the temporary drop, in rental rates. Now, we're gonna give you a couple minutes to absorb all this, and you're gonna see a couple of our commercials, and when we come back, I'm gonna tell you what we forecast is gonna happen in the future and tie it into what's happening now. Costas Kivelos, I'll see you guys back soon.
Let's talk about make money.
Welcome back, everyone. Costas Kivelos here from First Access Condos, and we have a very informative episode that we are continuing right now, and where we have told you what has been happening to our real estate market up to date. Now I'm going to tell you what is not only happening now, but what we forecast is going to happen. And what we've seen is very high demand in the resale aspect of our market and continued high demand in the pre-construction segment. Now, why has this been happening? Well, I told you that there were three factors that are the underlying foundation of the increase in our market. How we said we had low interest rates, how I said there was increased capital being saved because nobody's really going on vacation or going out to dinner. And I also said how there was also a shift in demand for larger properties. Now, what we have said in previous episodes was that there was going to be a huge jump in the market later this year when foreign students returned, some 60,000 in Toronto, okay? We were gonna see a restart in tourism, so Airbnbs come off the rental pool and they continue doing what they used to do. And we are also gonna see a massive spike in immigration to our country. The Liberal government last year increased the yearly quota from 300 to 400,000 to make up for the loss that we saw during COVID. So of those 400,000 people, 60%, some 240,000 a year, are going to come through the investor economic stream. Those people have more flexibility on where they decide to live, and a large majority are going to come to Toronto. So when we have those three factors at play, we at First Access Condos had forecasted a large spike in demand for real estate in the fall. But leading up to the fall, what we've seen is people who traditionally haven't been investing in real estate getting into the market. Who are these people and why? And before I tell you who they are, I'm going to tell you why. Inflation. Everyone's talking about the risk of inflation. Now, what is inflation? Eflation is when your currency devalues itself. So essentially, if you have $1 today and that dollar can buy one pack of gum, but next year that $1 cannot buy that pack of gum. You need $1.25 to buy that pack of gum. That is inflation. It's when the value of your currency decreases. And how does that happen? And this is going to be very simplified for everybody. That can traditionally happen when a government prints more and more money. More money that starts to circulate, the less the value of that money. And that is what we have seen in the greatest levels since World War II through COVID. Our government decided that the way to get through COVID was to give out money, to give out free money, but we all know nothing is free. So what they've done is they've printed and printed and printed money and tried to help everybody out. And I'm not going to knock this. Their programs have helped a lot of people get through these times. But one of the byproducts of this is inflation. Now, that is a real threat currently. So what we see now is people traditionally who are liquid individuals, okay, and might be investing stocks or some other revenue stream are starting to get into the real estate market. And where we see this most is in higher end product. Now, there was a project that we were selling a little while ago, and it was one of the most expensive projects the city has ever seen. And it experienced record sales and surpassed all expectations. Now, this is what we are currently seeing now. So although we had those three fundamental factors with the interest rates, as I mentioned before, which fueled the market through the first half of the COVID pandemic, now we are seeing, before the immigration and the foreign students come, we are seeing the risk of inflation continuing to keep the market healthy. Now, what does this mean for you? This means that you, who was expecting a drop in prices, and many people have said for years that we are in a bubble and prices are going to drop and they're waiting for this bubble to burst. I can't give you more warning than I already have, but I'm going to try one more time. Our market is not going to see a drop in prices. Our market is only going to continue to get more expensive, and you need to get off the sidelines if you plan on buying an investment property, or for those of you that don't have a home that you own, you need to get off the sidelines again, because this is a golden opportune time. And I'm going to get into why it is a golden opportune time now. So why is now, right now, the best time for you to get into the pre-construction market? I'm going to go over a couple factors. One, with construction costs rising, the price of the product has to rise and offset the increase in construction costs. If construction costs keep going up, prices are going to keep going up. Two, as soon as immigration picks up again and foreign students come back, and tourism kickstarts again, you're going to see an increase in demand for product. An increase in demand always leads to an increase in price. And three, we are in the last few months, if that, of extended deposit structures as a positive byproduct of COVID. Now, let me talk about this a little bit more. And I've been trying to hammer this out on a few episodes now. One of the silver linings of the COVID storm cloud was it further deferring of deposit payments required by developers for your pre-construction purchase. Now, those of you who have watched this are quite familiar that traditionally we have 20% down over the course of a year and a half. And we all know why we need 20% down, because that's the amount you need to put down so that the developer can get their construction financing. Remember, the developer doesn't build with your money, he builds with the financiers. Your money is in a trust account and it is insured. And that's why, again, we are one of the safest investment streams in town. Now, when you have these extended deposit structures, it allows you to keep your money with you longer. Now, why is that important? And this is one of the fundamental reasons I support investing in pre-con. A lot of us who invest in these either pull out money from our homes, from the equity that is built up over the years through a HELOC, which is a home equity line of credit. And how we do that is while we draw the money, we only pay interest on the money that we have drawn. So the longer the period of time through in between your payments, the less interest you will pay in the end, meaning you will make more money. Now, for those of us who are not using our home as a bank machine and withdrawing that money to invest it, which is good debt, There's also other people that have their money invested in other revenue streams, whether it be stocks, whether it be GICs, mutual funds, etc., etc., etc. There is a long list. But those people have their money somewhere that's making them money. It is accruing interest. So the longer you leave your money in those revenue streams, the more interest it's generating, the more profit you're making. So the longer the period of gaps between deposits, the more money your money's still making you. So you can still be making money from your pre-construction investment and making money from your other stream at the same time concurrently. Now, we've always talked about how we have been generating over the course of the past 5 years a 50% annual return on your down payment. And that's a total down payment, regardless if you've submitted it or not. Now, imagine you can be generating that 50% annual return on money you haven't even given, plus be generating a return on the money that's still invested elsewhere. So this is a unique opportunity where you're actually double dipping and eating with two forks. Now that's the best place to be in financially that you can. So now I know this was a lot of information for today. And before I let you guys take some time to absorb and we talk about why we actually come here, we talk about how you make money, we cover the numbers that are real returns that myself and my clients have made on a past purchase, which is basically the golden rule of thumb for the majority of the pre-cons we've sold over the past 5 years. I'm gonna recap everything we've talked about in a quick 60 to 90 seconds. So today I talked about what has happened over the course of COVID with our economy here in the GTA. I told you how money that was saved, low interest rates, and an increase in demand of wanting to change your dwelling had fueled the resale market late last year and throughout this year. I told you how the pre-con market, for multiple factors, had remained strong. And I also went into who is buying these pre-con units, how a new segment of society who traditionally doesn't buy pre-con and real estate has gotten into our real estate market because of the risk of inflation. And I'm not an economist, but to whoever you talk to, and if you watch the Business Network, the fear of inflation is very real. I also told you what factors are going to come in play in the near future that we predicted to keep our real estate market booming for the years to follow. Now, in the end, I talked to you about why we can still capitalize on extended deposit structures for the next few months. Now, everybody knows this isn't live, so it's been a couple weeks since I filmed this, but if you can tell by what I'm wearing, it's the summer, so it's pretty fresh. And absorb this information. Contact us at firstaccesscondos.com so we can get into more detail and find out the right project for you. Now, we're going to take a couple minutes for you to absorb this and see some message from our commercials, and then we're going to talk about how we end the majority of our shows. We are going to break down money that we've made. Thanks for hearing me, and we'll be back in a few minutes.
Let's talk about make money.
Considering purchasing a pre-construction property? You're going to need an experienced lawyer on your team. David Young of Sobrera Law has the knowledge to address your legal needs. If you're buying, selling, investing, or signing a pre-construction property, contact dyoung@sobreralaw.com or 365-509-2039, extension 106.
Welcome back, everyone. Again, I'm Costas Kivelos, founder of First Access Condos and mentor to over 5,300 realtors at Canada's largest independently run and owned brokerage. Why do we invest our money, especially in real estate? For one thing, capital appreciation. And when we talk about capital appreciation or any type of real estate investment, you're going to hear the term ROI. What does that stand for? Return on investment. And that's what we are looking for. I'm going to use a real life example of one of my investments that 15 of my clients followed me into, and we're going to tell you how they made money and how much. If you bought a unit back in November 2015 at 150 Redpath in the Yonge and Eglinton area of Toronto, a 600 square foot 1+ den was selling for $372,000. That's $620 a square foot. The initial 20% down payment worked out to $74,400. Current resale today in the Yonge and Eglinton area for new condos is at $1,050 a square foot. Now your 600 square foot 1+ den at Redpath has a current market value of $630,000 compared to the initial purchase of $372,000. When we subtract the new number from the old one, that works out to $258,000 in gross profit. Now, when you talk percentages, because that's how we measure return, that's a 347% gross return on your initial investment of $74,400. Now, I ask anyone to try to beat that number across the globe, and I'll tell you, they won't be able to do it. Now, when you talk about buying a pre-construction condo, you're going to hear the naysayers tell you that your condo will cost you money every month and it won't be able to carry itself with the rent that you're going to accumulate from your tenant. Now, the answer to that is, as I've touched on earlier, is that it's not that important to be positive cash flow monthly. Capital appreciation is what we're aiming for. But let's run over the rental numbers. Currently, if you were to buy a 1-bedroom in the city of Toronto at $600,000 with a down payment of $120,000, you would have to service a mortgage of around $480,000. Now, forecasting that rates are going to go up, that would be around $1,900 a month given increase in rates, not by today's standards. If you have maintenance fees at 65 cents an interior square foot, that works out to $390 a month. Property taxes at about 1%, which is excessive, but let's just say that because we know the city's going to need money after COVID. That would be around $500 a month. Insurance, $50 a month. Water, $20 a month. Total expenses of approximately $2,860 a month. In 4 years, with a 7% rental increase, which is extremely conservative because we know that immigration is going to explode to the area, your rent would increase to $2,900 a month with expenses at $2,860. That's cash flow positive monthly of $40. It works out to just under $500 a year. Now, we all know no one's going to become rich from being a landlord with rent, but it will cover your carrying costs. And if mortgage rates stay low, that number will jump significantly. Now, we've been filming this during the time of the great school closure of 2021. And hopefully by the time this airs, the kids will be allowed to go back to the last few weeks of school. But regardless, today was Come to Work with Your Dad Day. So I have the pleasure of having Pano and Stavro with me today. So Pano, who are we?
First Access Condos.
And Stavro, what do we sell?
Condos.
So if you want to make some money, listen to Pano and Stavro and invest like his father has for them. www.firstaccesscondos.com, and I'm always available by phone, 416-662-5701. This is Costas Kivelos, Pano and Stavro, and thank you for tuning in this week. Have a great day.